If you love our crypto content or are looking to learn even more about crypto, be sure to check out and subscribe to our new YouTube channel after this video dedicated to all things crypto. Find new videos every week. Be sure to check the link in the description.
Hello, Real Vision people. This is Sebastian Moonjava, and today we have Chad Barraford of Thorchain. He is the technical lead. So happy to have you here, Chad. I've heard so many interesting things about Thorchain. How are you doing?
Good, man. Thanks for having me on the show. I'm really excited to be here.
So let's jump straight into it with, let's hear a little bit about your background and how you got into crypto.
I got into crypto in 2017. I made the choice just to travel the world for a year. So I just sold everything I had and just like, you know what, screw it. I'm going to sell everything and just travel the world for a whole year. And in that travels, I met these two guys who were big ETH heads. They were like big fans of Ethereum and Bitcoin and all these things. And they were to tell me all about like cryptocurrency. And I was like kind of sucking up whatever knowledge I could get from those guys. And so I was really fascinated by the technology of it, being an engineer myself. And I said, well, if you really want to understand something, the best thing to do is actually build it yourself from scratch. You know, that's a great way to learn, like, how does this blockchain thing like really function and work? And so I kind of built like an academic sandbox of types of trying to build like a chat application on a blockchain just for giggles, just for fun. And then once I got through that process, it took me a few weeks to hack together something loose and, you know, something semi-functional. I realized that this is one of the most important technologies of the century. This can restructure societies in ways that nobody could have dreamed before. I was like, wow, this is such amazing, and it's so immature. It's such like a little infant, newborn baby that just needs so much attention and love, and to help it mature to something that the whole world can adopt and use. And I just decided to dedicate myself to this.
So how did you stumble into the Thorchain project?
Yeah, I went to a hackathon in Berlin in mid 2019. I was actually going there for a job interview. They were like, "Hey, we want a new CTO for this company. We want to test you out. So let's get in this hackathon to see how you code, whatever." It was a Cosmos hackathon in Berlin. And at the time, actually, I had never used Cosmos or even heard of Cosmos at that time. So I read the documentation the day before, and then I showed up the day of the hackathon, and me and this other guy just hacked for a while. And that was the very first lines of Thorchain, actually.
That's exciting. So tell me a little bit about the decision for the Thorchain group or whatever to utilize Cosmos. Can you maybe give a little breakdown of how it's different than something like Ethereum?
So Cosmos is really makes it easier to build your own sovereign blockchain, separate from everything else in the world. Like, you can build your own blockchain with its own validator set, and which makes it such a powerful tool to help developers and empowering developers to build really interesting applications. The thing with Ethereum is that it has a lot of limitations to it. Similar to like actually Bitcoin from a scripting perspective was very, very, very limited what you could do. It's partially what made Ethereum so successful is that the language Solidity being Turing complete made it much more easy and flexible to do things you could not do like natively on the Bitcoin chain. And to me, Cosmos is the same thing, just expanding it even further. Because there's so many things you can do on Cosmos you just reasonably cannot build on Ethereum. And this idea of what Thorchain does, it's an example of that.
Cool. Let's talk a little bit about Thorchain specifically. Can you tell me, like, what is the problem that it's solving? What is Thorchain?
Thorchain is solving a really major problem within the crypto sphere of we have this problem of when you want to move your assets, like say you want to move from Bitcoin to Ethereum, the really only viable way of doing that from going to layer one, like real Bitcoin to real Ethereum, the only way you can really do that today is to...
Hi, I'm Raoul Powell. Sorry to interrupt your video, I know it's a pain in the arse, but look, I want to tell you something important. I can tell that you really want to learn about what's going on in financial markets and understand the global economy in these complicated times. That's what we do at Real Vision. So this YouTube channel is a small fraction of what we actually do. You should really come over to realvision.com and see the 20 or so videos a week that we produce of this kind of quality of content, the deep analysis and understanding of the world around us. So if you click on the link below or go to realvision.com, it costs you $1. I don't think you can afford to be without it.
Like say you want to move from Bitcoin to Ethereum, the really only viable way of doing that from going to layer one, like real Bitcoin to real Ethereum, the only way you can really do that today is to go through some sort of centralized entity like a Binance or a Kraken or a Coinbase. And considering the ethos of like crypto, it's like, this is a ridiculous notion. Like, Why do I need to go through a centralized entity to use a decentralized network? Like,
Yeah.
It makes no sense at all. And this has actually been a very difficult problem to solve that people have been trying for many years now. And like, atomic swaps, one of the earliest attempts that just didn't pan out for a whole host of reasons why that didn't work out. But Thorchain has actually the team has figured out a way of doing this in a completely decentralized way so that you can actually move your Bitcoin to Ethereum, to Litecoin, to Binance, to whatever it is in your heart's desire in a completely decentralized way, where it's censorship resistant. You don't need to ask for permission. In fact, the only requirement of the system to move your Bitcoin to Ethereum, for example, the only requirement is that you can make a Bitcoin signature. That's it. You don't need to sign up. You don't need to give an email address. You don't need to download a specific wallet necessarily. All that's actually required is just a simple Bitcoin signature, and then you can acquire Ethereum or Tether or whatever coin you want to acquire.
I always try to think about, competition. When I talk to new projects or I'm researching a new project, I'm like, what other project is like this, or who's competing? And so you guys are using like Cosmos, right? That's the Cosmos meta chain or whatever to make Thorchain go. But it sounds like, because you're a swapping protocol, initially I would think, oh, is this a competitor to Uniswap? But then now the way that you're describing it makes it sound like this is more of a competitor to centralized exchanges. Is that how you feel as well?
Absolutely. I think they have a monopoly right now, the centralized exchanges, on being able to move from chain to chain. Right? Because all these chains are like isolated little islands that have no connection or relationship to each other. And Thorchain is building a highway between these chains that's completely decentralized, right? That is huge. That is ginormous. There's still a value in, a Uniswap or a SushiSwap, supporting a long tail assets of like thousands of ERC20 tokens. Thorchain will be more like a short tail system where it's focusing on, the top 100, the top 200 assets. It's not going to, support thousands of coins per se. Probably not. Up to the community side in the end. But there's still really a lot of value for the current DEXs we have. And I think people will continue to use them. But I think the value that we're actually proposing is you don't need to use centralized exchanges to move your assets from Bitcoin to Tether, for example.
Tell me a little bit about how does this work? Because what are the incentives, or obviously you need liquidity for this to work. Is this an AMM? Is this an automated market maker? Is that how?
Yeah, absolutely.
And then for our audience, can you explain a little bit about what that means, how that works?
Yeah, so this is an AMM, automated market maker, as you were saying. Effectively, what that means is people can provide liquidity into these pools of the network, right? So there's a Bitcoin pool, for example, and every pool on Thorchain is comprised of two assets. One is always Rune, which is the base token or the native asset to the chain itself. And then the one is the other asset. Could be Bitcoin, could be Ethereum, could be USDC, whatever it might be. And so that's providing the counterparty to any trade. So instead of being like an order book where you're connecting this trade to this trade over here, you're actually trading peer to pool. And so you don't have to wait for a specific person to come up who wants to sell X amount of ETH at a Y price or whatever that might be. You're actually trading with the pool directly at that moment. So there's always a counterparty. There's always the ability to trade a Bitcoin to Ethereum without needing to wait for somebody else to come along to provide the other side of that deal. The pool is always there. It's continuously a liquidity pool.
Great. So then can you talk to me a little bit about Rune then? What's the purpose of Rune, or the tokenomics of Rune? What does Rune do in the ecosystem? What does it do?
Probably the biggest and most important thing that it does, it does a bunch of things, but the most important thing that it does is provides the security of the network itself. It ensures that all the Bitcoin that the network holds, or the Ethereum or the Tether or whatever, the Litecoin, that it is held in a way that is secure, that nobody can steal these assets, and certainly not in a way that is economically viable. So that's the most important thing to do. And so if you were to use something that wasn't Rune, like Bitcoin, for example, or Ethereum as its base asset, it would not be viable. You cannot do it that way. The network can be hacked, it can be stolen, all the funds can be lost, and that would not be good, because you can attack the network with, let's say, $30 million and walk away with $50 million if you were to use Bitcoin as the base asset. But Rune, because its value is tied to the network, you will always lose money in the event that you do so. spending $30 million to get $10 million on the other side of it. No one's going to do that. It doesn't make any economic sense.
Is this because it's skin in the game, right? Like that you have to prove that you have skin in the game in the network in order to transact with the network, or in order to make that work? Is that correct?
Partially, but also because if somebody were to cyber attack the network and like just steal all the funds, it's just like somebody did that, they had to have bought a vast majority of Rune, with probably more than half the circulating supply of Rune, which is, would literally be billions of dollars in a literal sense. And then if you attack it, as soon as the network is attacked, it's publicly known by everybody, because the entire thing is just completely transparent. And so all of a sudden the value of Rune goes to near zero, because it doesn't actually do what it's supposed to do, which is securing the assets. So the guy spent, huge, vast amounts of sums of money to buy an asset that once he hacks goes to zero. And so all the money he spent goes to zero. And meanwhile, he walks away with far less in Bitcoin and Ethereum and all the other assets. It makes no sense to actually attack the network in this way.
So what about, are there privacy features to Rune, to Thorchain?
Yeah, that's a good question. We talked about the idea of this as a team, whether or not we wanted to do this or not. We actually ended up deciding not to do any kind of privacy features, and for good reason too. It's because it's actually kind of fascinating. In order to do transactions from chain A to chain B, at some level, somebody needs to know to send the Ethereum to this address at some place at some time, right? Somebody's got to sign the transaction on the Ethereum blockchain, which is generally the nodes, the validators of the network, right? But if you did it in a way that only the nodes knew where all the transactions were going, and they actually could see underneath the privacy, if you want to put it that way, that would only incentivize like the FBI, the NSA, any three-letter organization to say, you know what, we should become validators so that we can spy on the network and see what funds are going where. So then you're actually creating another incentive to become a validator node other than the economic incentive, which goes against the entire network. And so we don't want to get into a situation where like every country around the world is running a node, every like NSA like organization across the world be running a node, because then they're not running it for the purpose of the network or the value accrual of the token. They don't care about that. They just care about spying on people. And that goes against the security of the network itself. So you actually could not, at least from my perspective, this moment, you could not actually add privacy in a way that it wouldn't actually make the network insecure.
I see. Can you maybe walk me through like a scenario of, if I've got Bitcoin, can you explain to me how this works? Like, just like step by step to say, okay, I have Bitcoin, maybe I want to earn some Rune or right. So what would I do? I would deposit it. What is the process of providing liquidity to the network?
Yeah. So if you want to provide liquidity to the network, you can get, there's a wallet that the team has put together. There's other wallets out there made by the community. So you can choose whichever one you like. It doesn't matter. And so you can choose a pool. Let's just say the Bitcoin pool, for example. And if you want to, you can provide Rune and Bitcoin to that pool, and then you own a percentage of that pool. And so anytime there's swaps in that pool, or any additional funds that come to the pool in any way, part of those rewards go to you, and so that you accrue more value over time, which is great. But one of the nice things here is that you actually don't have to provide both of them if you want. If you hate the Rune token, you think Rune is trash or whatever, like your mentality is, and you want to provide just Bitcoin and actually get more Bitcoin on the other side of it, you can do that. You can actually just throw up one Bitcoin into the system and then come back later and get, 2 Bitcoins or whatever the hell the number would be, right? You can actually earn more Bitcoin by providing solely Bitcoin if you wanted to, or you can provide both assets, Rune and Bitcoin, and get more Rune and get more Bitcoin.
Yeah. So again, because you are basically being the market maker, providing liquidity to the Thorchain, to Thorchain, that you can get, basically you're receiving some of the fees that are being processed by the chain, correct?
Exactly.
You said you can do it single-sided as well. So like, because again, when I think of it, normally I think, okay, you put these two assets and then the difference as those two assets that you provided are traded, you earn some. But now you're telling me that you guys have it in such a way that I don't need to deposit anything but a single coin.
Yeah.
And how is that different, or how does that kind of work on a high level? How is it possible that I can just put one asset in instead of two?
Yeah, it's a good question. So The pool always has to have an equal amount of Rune and Bitcoin, for example, right? That in terms of their dollar value, they have to be more or less the same. So if you add just a bunch of Bitcoin to the system, now the system is still like off balance, right? It doesn't have an equal amount of both assets. So this is what we call an arbitrage opportunity. So if you don't provide the Rune side and just do like a double up, kind of like move the whole thing up, you can provide just the Bitcoin side, and then an arbitrage bot will come in and supply the Rune side on your behalf, right? That comes at a slight cost to you, depending upon how deep the pool is and how large how much liquidity you're providing, how much Bitcoin you're providing to the pool. But it comes at a slight cost to you. So you're starting off at like a slight loss. Effectively, it would be the cost of like swapping. If you were to do take half of your Bitcoin, swap it to Rune, that's like effectively what you would be your initial loss on providing liquidity. Of course, as you provide liquidity, swaps are going back and forth in the pool, and you're earning interest. In addition to that, there's also block rewards of Rune being pumped in all these pools as well. So you're actually earning interest from that as well, which is great. And so that you'll earn back the initial loss that you had eventually. And when you come back later and you say, okay, I own this percentage of the pool and I want to pull out just Bitcoin, you can tell the network to pull out just Bitcoin. And effectively what happens is you actually own Bitcoin and Rune, but when it takes the Rune, it says, okay, you don't want the Rune, so we're going to swap the Rune to Bitcoin and then send you just the Bitcoin to your wallet. So you actually don't even need to touch Rune at any given point, but you're still exposed to the Rune asset within the pool itself, because you're taking your Bitcoin and you're buying ownership of that pool, which is comprised of those two assets, but you don't need to touch the Rune asset at all.
And you said you're like, you could provide one type of liquidity and then like an arb bot will fix that. When you say this, like arb bot, the arbitration thing, is this a part of the actual protocol of Thorchain, or is this the assumption that some other third party is going to arb this out? Is that?
Yes, some other third party. It's an open protocol that anybody can write their own bot, and people do to see these opportunities to make money by putting Rune in and getting more Bitcoin, or other way around in terms of like their dollar value. Anybody can do it in the world.
And then you also said like basically block rewards that are being given to the liquidity provider as well. Is that what you just said? So,
yeah, that's true.
To make sure, this is like basically this is yield farming.
Yeah, in a sense. Yeah.
Great. And so can you maybe explain a little, just reiterate kind of what we're saying here is, what is yield farming? What does it mean that they're getting block rewards? Maybe what is the block rewards going to go? Is that forever? Talk to me a little bit about block rewards.
Good questions. Yeah, sure. So in the system, there is something that's called the reserve, right? The team will be putting in over time to top that up to about 200 million Rune, which is worth, I don't know how many billions of dollars right now. It's a lot of money. And that will be used as the kind of the block rewards of the system. That's a few purposes, but that's one of the purposes of that. And so every time there's swaps on the network, and the larger community says, these are the pools that we value, the Bitcoin pool, the Ethereum pool, with the quantity of funds that's being passed through it, the network will say, you know what, the ones that are being used the most, like the Bitcoin pool, the Ethereum pool, let's say, all right, let's reward those pools and kind of, dish out some Rune into those pools and increase the yield on those particular pools. That happens on every block, every 5 seconds, 6 seconds or so. And it actually does help the yield in increasing that.
Because this is basically an incentive for you guys to get liquidity into the market, to make sure that this machine is running well, right? That you're saying, we'll give you a little bit of ownership of the network as long as you're participating in the network, right?
Yep, absolutely. Yeah. You can hold Rune in two ways, really. You can either hold it in your wallet and just kind of put it off to the side and have it be dead capital that just sits there and doesn't really do much, which is what most coins do today, because you don't even have options anymore until now. Or you can say, I'm going to take my Rune and put it into the network, either bonding as a node validator or providing liquidity in the system, and earn yield on that. And what's unique here to Thorchain is that for the first time in history, you can now take your Bitcoin or your Litecoin or your even Dogecoins coming up soon, like all these assets which had no ability to make yield on those things in a decentralized way, all of a sudden it's available to you. You can actually have 20, 30, 40%, 50% yield depending upon the pools. And that's game changing. So
this is a decentralized project, correct? Mm-hmm. Then how are the assets chosen, right? You just said Dogecoin might be added, Ethereum, Bitcoin. How are these decisions made? It's not you saying, I love Dogecoin, so I'm going to add it. How is this process done?
So how that functions is First, there's a code change that needs to be made to support, let's say Dogecoin, right? So the network can monitor wallet addresses on the Dogecoin, the Doge blockchain. And so that code chain can go out, and then it's up to the validators of the network to say, all right, we think that Dogecoin is a good blockchain or whatever, and we kind of vote to add it effectively by monitoring that blockchain and saying, we're going to say support that blockchain. Once a super majority of validators, 2/3 of them say, all right, we're going to add, Dogecoin or Zcash or Monero or DOT or, whatever, it doesn't matter what it is, that is now a supported chain of the network. So the only way you can actually add chains or even remove them is through a consensus around the community of validators.
And so the consensus from the validators, just to make sure I'm understanding correctly, is this related to the token? Meaning, like, are the validators have X amount of tokens each, and then they're saying, hey, we're putting up, we're voting with our tokens. Is that how it's working? Is that how it works?
Well, in a sense, yes. So, but a more precise way, a little bit, no, it's a little bit confusing. I'm sorry about that. But each validator needs to bond with a mounted of Rune to be able to be churned into the network, to be a participant of the network. Right now on single chain chaosnet, that is over 1 million Rune, which is worth, I think, $1.5 million. It's about 15 million, I guess. Oh my gosh, holy crap. I can't even believe this now.
It changes fast. It changes
fast. Like my brain just like, is it gone that much that fast? Like, oh my God, wow. Anyways, it's about $15 million right now. So in order to run out, and that's not because like the team says this is what it costs to do it. That's just because of the capitalistic markets. Everybody's just kind of saying, I want to be a validator. I'm willing to put up this much amount of money, this amount of Rune to become a validator. And the network says the highest bidder wins. You put up $15 million. Here you go. Come on to the network. You're churned in. You're part of the network. And so they all are heavily invested into the Rune token, obviously. And so they wanted to do what's best for the network and what's best for the token itself. And so they're greatly motivated to do what's best for that network. And so they end up deciding like, okay, we want to add this coin to that coin or this chain to that chain. And so they have to make the decision based upon, does it add value to the network? Will it cause more swaps to come through the system? Is it going to add a security risk? Maybe all these kind of calculations have to be accounted for.
It's funny. I follow you guys on Twitter. I follow the Thorchain channel, and I see lots of discussion like with Bitcoiners, because Bitcoiners, a lot of them are really like, Bitcoin's the only one. But it seems to me in doing research on Thorchain is that it seems so complementary to Bitcoin. It seems so, and can you talk to me a little bit about like maybe your own experience with the community and like how you see the reaction to what you're working on, and how you like, do you agree that it's beneficial and complementary to?
Yeah, I mean, for sure it is. I mean, there's a lot of great projects that are being built on Bitcoin, right? Whether it be Lightning Network, Liquid, all these things. There's lots of great projects being done. But in my opinion, there's no project that's contributing more to Bitcoin than what Thorchain is doing. I mean, I was talking to somebody on Clubhouse, and I don't want to mention specific names, a very well-known individual, and they completely dismissed the project entirely. There's a hardcore Bitcoin maxi guy, and he completely dismissed it offhand. Just like, nah, like just, And I was just like, I thought to myself, like, this is a person who actually supports like BlockFi, which is a great, service, a great company. I like them a lot. And so that person puts their Bitcoin into BlockFi so they can get like, which is now I think like 0.5% interest, something they lowered it because of some GBDC issues. And like, they will trust a centralized entity to hold their Bitcoin for them just so they can get a yield on their Bitcoin. And like Thorchain is saying, hey, you don't need to trust a centralized entity. You can just put your Bitcoin in here and get like 20, 30, 40% yield on that year over year, compounding interest. And you don't need to trust anybody. Like you can get Bitcoin and get more Bitcoin with it. It's mind-boggling.
And so the main thing here that you're saying is that, to go along with the ethos, especially with the Bitcoiners who I think you tend to have like the strongest ideology about like, it should be decentralized. We don't want all of these like pseudo decentralized things. And basically you're saying this is a decentralized way in which you can transact with your coins and have options with them and a potential yield in a decentralized way, but people are dismissing it out of hand just because it's not it's not Bitcoin?
Just because it has its own token, right? Just because the Rune token exists off the bat, I'm done. I can't deal with it. Like it's a crap coin, as some people like to call it, or whatever. But like as I was saying earlier, like you actually can't do what Thorchain does with Bitcoin. It's actually economically not possible without having all the funds just stolen out from underneath the entire system. You have to have a token that's sole purpose and its sole value is tied to the chain, that network that actually is creating the ability to move between chain to chain. It's actually a requirement of the system. You cannot do this with Ethereum or Bitcoin or Tether. It doesn't matter. It has to come from its value has to derive from its own chain.
And I've heard this. I've heard people tease about Bitcoin a little bit, about saying like it's become like a custodian to custodian chain, right? Like you're just going from wherever, Coinbase to Kraken, and this is like how it works. But that's not the ethos, right? So you are actually, or Thorchain is contributing to this. Like, hey, if you want to swap your coins, you can do it in a decentralized way now. You don't have to depend on these intermediaries, these centralized players that, again, that kind of goes against the entire ethos. So not only the ability to have more basically utility out of your Bitcoin, because you can now swap it for other things if you want, or also you can earn yield in a decentralized way. So to me, it sounds like that's what was interesting to me about the project, is that I'm like, well, it sounds like it's fixing this centralized exchange custodian problem, which is a massive problem. I think a lot of people in the crypto space who care about, like the freedom or this self-custody thing, that this is a huge deal. And so on this idea here that we're talking about, like Bitcoin maximalism and decentralized exchange and stuff, Eric Voorhees, I've heard him talk quite a bit about Thorchain, which is pretty big too. And again, he's gotten some heat from the Bitcoin community for even mentioning it, right? But to me, when I hear him talking about it, and then I just heard the other day that SHAPESHIFT is going to be incorporating Thorchain in like the back end, basically. And when I hear this, it made me so excited, because like I've followed Eric's kind of like progress through the space since early on. And, SHAPESHIFT was KYC AML. It had all of these like restrictions and frictions in the system. And then when I heard that he's like, oh, we're actually using this decentralized stuff now, I was like, yes, that's great. So can you talk to me a little bit about that? Or are you guys at all involved with SHAPESHIFT, or did they just talk to me a little bit about that?
Yeah, I mean, SHAPESHIFT is one of the oldest and most respected exchanges out there. I mean, mad props to Eric and the team. They do amazing work over there. But in a lot of sense, the original vision of SHAPESHIFT was to do a cross-chain swapping without KYC, and that was the initial attempt to do so. And unfortunately, the technology didn't really exist at that time to really fulfill the dream of what Eric and John were trying to do over at SHAPESHIFT. And today, because of Thorchain allows you to do exactly what the vision initially was, they got really excited about this project, and reasonably so. And so they've been big supporters. We've been in communication with them for quite a while here. Right on the day that we launched the Thorchain network, they also launched support for Thorchain on their exchange. So now when you're using the mobile app and you're swapping Bitcoin, Ethereum, it's completely decentralized process, which is absolutely fantastic. We're excited to have Eric and team and SHAPESHIFT kind of help contribute to the ecosystem of Thorchain. And I think they're just going to be just the first kind of domino, right? They're just the first ones to kind of adopt it on day one. And we're going to see a lot more of that. We're going to see more wallets interact with it, more exchanges interact with it. Soon you're going to be using Thorchain and not even know that you're using it. It's just happening in the background.
Did you or anybody maybe that's something also we can talk about next, is kind of like the foundation and stuff, but did you or anybody on the team or whatever, did they have a discussion with the SHAPESHIFT team and they help them incorporate, or did they just incorporate it and you're like, awesome?
We're having conversations with them, right? And they want to understand, in depth, how does this actually work to make sure it's secure, that it makes sense, that the economics are correct. And so they did a very in-depth kind of analysis of the fundamentals of this project. And we certainly answered those questions. But when it came to time for them to actually interface with it, they really did that 98% on their own. We didn't write any code for them. We didn't get involved in any of that stuff. We just answered some simple questions from time to time that they might have had. but they did it completely on their own, and they didn't even need to ask permission, right? The whole thing is permissionless system, so they could just interface if they chose to. Great.
The power of open source, right? The power of open source. And I think that's massive. And also the way that I think about it, and tell me if you agree with this framework, because when I heard about this, when I heard about the SHAPESHIFT integration, I'm like, wow, doesn't this mean that now Thorchain has like a really nice user interface to interact with it? Like, and you guys didn't even have to build it, right?
Exactly.
Yeah, I think
exactly. There's going to be hundreds of interfaces to this network eventually over time. Whether you're using like a Trust Wallet on your phone, or Exodus, or any eventually I think even Coinbase and Kraken and Binance will probably interface with the system at some point in time. I think it only makes sense, at least from my perspective. So eventually there's going to be thousands of interfaces to the system, and as a team, we've created one interface, the Asgard X desktop wallet that anybody can download for free. It's all open source and readily available for anybody to use if they want to. It's really like an implementation kind of like model, like this is how you can do it. And here's some code to show you how to do it. And if anybody wants to take that and build their own interface and their own iPhone app or whatever they want to do, hey, go at it.
Yeah, it's awesome. Again, the open source stuff I think is, I don't know how anybody can compete with what's coming from the open source world. Let's talk a little bit about the foundation, right? Like what is is there a foundation? What are the plans for the foundation? How much control does the foundation have over the network? Talk to me a little bit about that.
Yeah, that's a good question. So there really isn't a foundation per se, any kind of like entity of that kind of idea. Really at this time, there's just a team that exists now, but the intention is to disband and just get rid of the entire team over time. We're only there. The team is only there to kind of give birth to the thing, not to own it in a sense, right?
Yeah.
The Thorchain network itself and the protocol itself is not owned by the team. It's owned by the community. There are literally dozens of teams that are contributing to the system itself. Over time, though, in July of 2022, there's a planned obsolescence in which the core team will just disband, and all the funds that are currently in there, which last time I looked was $108 million. I think it probably right now is probably closer to like 160 or 170 million, probably, I'm going to guess. That'll just be sent out to various teams in the community. It'll just like be split up into pieces and parts, and everybody's just going to get some parts depending upon if they're adding real value to the ecosystem.
And that was from inception, this is, so again, you said planned obsolescence. So that is a part of the goal, because you guys are a part of this like ideology or ethos of decentralization. Why would we have a central organization?
Exactly. It's very similar to like Satoshi. If you think about like Satoshi, he, she, they, whatever Satoshi is, they created the Bitcoin blockchain and kind of gave birth to it in a sense. But Satoshi is no longer involved with the product anymore. He's been passed off to other engineers and other community members to maintain and build and implement and fix bugs or whatever it might be. And conceptually, this is very similar to that. It's some people that are come together to build a very complicated and difficult system. But once it's been built and been solidified and been reliable, resilient, secure, all these things, there's really no need for that team to continue to exist in a sense and just pass it off to the larger community to maintain.
I want to circle back a little bit to talk about like the protocol. And so we're saying also that it does not wrap assets, right? And can you maybe talk to me about like because you guys don't do it, can you explain to me like what would a wrapped asset be? And maybe are there like downfalls from this, or it's also not like a pegged asset either, right? Because Correct. It is actual signatures from the actual chains themselves, something like that. So can you maybe just like, for our audience, explain what it means, what other people are doing, like what is a wrapped asset and maybe why you guys are not doing that and some of the benefits to the way you guys are doing it?
Yeah, absolutely. So for example, if you wanted to use Bitcoin in, some DeFi app on Ethereum, for example, you have to use some sort of bridge to get you there. So you send in your Bitcoin and then they give you, some other asset on the other side. Maybe that's BTC, maybe it's WBTC, TBDC, whatever it might be. And by doing so, you're exposing yourself to additional risk. right? You have to trust that that bridge is going to exist tomorrow, that it is safe, that it holds that Bitcoin that it's holding in a secure way. And you have to trust that the ERC20 contract, that it is the Ethereum thing, that it is also secure. Hopefully that's the case. And then you have to trust the actual DeFi application that you're using to, gain yield or whatever it is that you're trying to accomplish. To me, that treats Bitcoin like a second-class citizen, because you have to expose yourself to additional risk and additional steps in order to use DeFi. If you're a native on the Ethereum chain, you're an ERC20, you're Ethereum itself, then great, you're fine. You can just use it, off to the races with you. But if you want to use Bitcoin, if you want to use something else, Zcash, something like that, you have to go through additional risks and take on additional steps, which is just, to me, this makes no sense from a first principles perspective. We've created a system where DeFi is on the Ethereum blockchain, which it really doesn't have to be. And we're kind of ignoring the most important asset of all, which is Bitcoin, which is like 60, 70%, whatever the number is right now, of dominance. And we're just like, DeFi is only for these guys over here. No. It's only for these guys over here. And so the idea of bringing Bitcoin to DeFi is inherently a flawed perspective, in my opinion. It makes sense, and if you look at like a foot in front of your face, that's a good stopgap, in a sense. But from a first principles perspective, what you really want is a DeFi application to be chain agnostic, to be asset agnostic. You can walk up with your Bitcoin, your Zcash, your Ripple, your Bitcoin Cash, your BitConnect. Who cares? It's all treated the same. It all should get the same exact treatment and the same exact access to those DeFi applications.
Does this mean that you guys are trying to have DeFi on Thorchain, or just the swaps is the main thing, or is the vision that you guys will have these other DeFi applications integrated to the system? Or
yeah, absolutely. So there are already plans. So swapping between one chain and the next is just the first step, right? Solving the complexity of being able to connect multiple chains and having highways between these chains is a very difficult problem that took the team about 88 weeks to solve, right? It was a very difficult issue to solve. The swapping itself, actually, the logic of swapping is very simple, like very, very simple, right? Like even Uniswap is like 527 lines of code, which is very, very tiny. Thorchain's like 150,000 lines of code, right? In comparison, right? The actual logic of swaps is actually very, very simple. And so once the swaps has been done and completed, there's more things coming. There's synthetics down the planned. There's composites and having like index funds, like ETF index funds is planned. Doing lending and borrowing, kind of like Compound or Aave is also planned to support that. There's some really major things happening in the downstream of Thorchain that really is going to reshape DeFi in a very significant way. I mean, even just like take Compound, for example, or Aave. It's a really great platform to do some lending and borrowing, but they only support Ethereum assets. So what if you could actually provide Zcash as your collateral and get Bitcoin, like real layer one, real Bitcoin as a loan? That by itself is a major transformation in the crypto sphere. Like that is huge news by itself. But the way that Thorchain is designed, that the network can actually do fixed rate interest, like actually true fixed rate interest, so that you can take out a Bitcoin loan, layer one Bitcoin for like 12% or whatever the number might be, and you were locked into that 12% for all of time. Not like it's not going to fluctuate to 40% or 30% or go down to this or up to here and have all that chaos and have to like monitor every day and pay back quickly if you get like too high or these things. In addition to that, like there's actually a possibility that Thorchain can do some really interesting concepts of once you take out that Bitcoin loan, because the collateral you're using is yield bearing, the yield can be used to pay off the loan. So you can take out like a layer one Bitcoin loan and then don't pay it back and have the yield of your collateral pay it back on your behalf for you. Just keep the Bitcoin, go up with it, do what you want to do with it, have fun, put in your cold wallet, whatever you want to do with it.
Talking about these things too, a couple other things I want to talk about was one, what made this possible? And if I'm understanding correctly, like from our previous conversation, is it like this breakthrough in threshold signatures? Like, why is it that nobody's done this before? Like you said, it took so long to solve this problem. But if you kind of, again, we don't have a deeply technical audience, but kind of like on a very high level, just so people can kind of understand, why is this happening now? Like what makes this special? What made it? What is the thing that happened that said, well, we couldn't do it before, but now here it is?
Yeah. So the Thorchain project itself had an early attempt or iteration of the idea back in 2018. And it didn't work out for a few different reasons, but one of them was just the technology wasn't there. Cosmos itself wasn't really quite launched quite yet, or so it was a very early form of Cosmos, wasn't really entirely viable at that moment. And also this idea of what you were talking about of threshold signatures, right? So threshold signatures are conceptually similar to like a multi-sig, right? Where you have like 3 out of 4 people who create a wallet address between them using the private keys together to combine together to own a wallet that requires a majority of the nodes, or majority of the people rather, to sign transactions out. That's really cool. That's really great. But there's some really big problems with this from our perspective. One is that each individual blockchain out there has to consciously add support for multi-sig signing. Some do it, some don't. And that by itself limits what chains that the Thorchain network could interact with if it went the multi-sig route, right? That becomes a limiter, which we obviously don't like. The second part is that sometimes when blockchains do implement multi-sigs, it actually only limits how many you can have. So like, for example, Bitcoin in a multi-sig, you can have no more than 20 signers in a single signature. Wow, well, that's a big problem. That means that as decentralized you can get is 20 people. Not very decentralized, right? We don't like that. So a multi-sig actually that supports as large as you want. You can have as many signers as you want in multi-sig, doesn't matter. And it supports any blockchain in the world. Doesn't matter if that blockchain supports threshold signatures or not. You don't need to support it. It just built in. It already does support it, guaranteed. So like that has created a way for the network to grow to 100 validators, 200 validators, 300 validators, and really have a decentralized project that can actually manage hundreds of millions, billions of dollars worth of various assets from various blockchains around the world, and be able to secure them in a way that actually is viable.
Great. No, yeah, that's exciting. And so basically, though, if I am understanding correctly, this innovation in threshold signatures is what's really making this possible now. Is that correct?
Yeah, you really couldn't do it viably without it, and that didn't come around until late 2018 with what's called the GG18 model. Like that wasn't really available at the time, and now that it became available, and Thorchain is actually the biggest user of this technology as of now. It's already securing, I think, like $600 million of assets on single chain, and I don't know how many million on the new multi-chain network, with 36 random validators, anonymous individuals, which none of them have the ability to take funds from the network. That's a first. Like that's never happened in crypto's history. Like that's the very first time this has happened, where you can have an untold amount of individuals who are completely anonymous, hold huge amounts of funds, and nobody be able to take any of it. That's huge.
So whenever I talk to people about AMMs, automated market makers, the thing that always comes up is impermanent loss. Mm-hmm. Can you maybe talk to me a little bit about what that is and how, if at all, Thorchain handles this situation, that problem?
Sure. Yeah, of course. I mean, permanent loss is a common thing within continuous liquidity pools. And conceptually what that means is that it's possible to, put in a certain amount of funds into a pool and then come back, tomorrow or whatever, and there's less money in there than what you had started with. And you're like, oh, what? I just lost some money. Like, how is this possible? And this is all about how the price of asset A and asset B relate to each other. So if this asset, goes 2x in one day, that creates a lot of arbitrage opportunity, which takes a little bit of money out. Each time an arbitrage bot kind of takes money out of the pool because they're putting in this asset to get this asset back, and they're getting a little bit of profit from that. And that profit has to come from somewhere, and it comes from the liquidity providers themselves. So as the prices change, it can cause some permanent loss. But what's important to note that is the tendency is that if you have impermanent loss in one direction, and then the price comes back to where it was before, as like a reversion to the means, the impermanent loss that you suffered actually gets taken away. You don't have that impermanent loss anymore. But in Thorchain's perspective, what we've done, the team has done, the community has done on multi-chain, is that it actually implements permanent loss protection. And it basically states that if you're in the network for 100 days, you provide liquidity for 100 days, which is a little over 3 months, then the network will actually ensure that you do not experience impermanent loss, because if you do, the network will pay out to you additional funds to make sure that you walk away whole, right? And that money comes from that reserve that I was talking about before, but that 200 million Rune, which is worth billions of dollars, pool that the network has. But the reality is, here's the funny part, is that when you're actually staked into a pool, you're earning rewards all the time, right? Swaps are kind of happening back and forth. You're just earning a little bit more rewards. The rewards go in a single direction. Generally speaking, it goes up, right? Impermanent loss fluctuates. It goes up, it goes down, it comes up, or it goes down. And so you might experience a lot of impermanent loss because like Rune is like, mooning or something like this. But then like it reverts back to the mean, or this asset catches up to it or something of that nature, and you lose that impermanent loss. So because the rewards are going up, impermanent loss is fluctuating back and forth like this. Eventually you get to a point, if you're in the pool long enough, the rewards always exceeds the impermanent loss. And so we actually did analysis of single chain chaos net. We found that if you're in the network for 100 days, the amount of impermanent loss the network would suffer is like 1.9%, which is like, not a whole lot of money, not a whole lot of assets. So it's impermanent loss is a funny thing where people like talk about it a lot, like it's a big problem within the AMM world, whatever. But the reality is, if you actually stay in a pool long enough and just ignore the impermanent loss, like, oh, I'm down today, I'm up today, whatever, just ignore it completely, and you just stay in it long enough. If you're in a good, well-designed AMM, you will always come out positive on the other side.
And that's why it's called impermanent loss, right? Is because the loss that you might be getting is actually not going to be a permanent loss, because like you said, over time, if there's actually activity being traded back and forth between it, you're kind of making up that loss. So, and then again, to make sure that I'm understanding, and for the audience as well, is that the way that Thorchain is handling this, even though you're saying like, it's probably not that big of a problem if you are holding long enough, like as long as you're committed to the pool, it should be all right for after enough time. But the way that you guys are handling it is saying like, okay, if you are dedicated enough to our pools, you stay in long enough, then if there does happen to be some sort of impermanent loss, we'll cover that. We'll just make sure that that's covered. Is that?
Yeah, exactly. The network itself, not we as in me or the team or whatever, but the network itself would say, we'll observe that like if this person experienced a permanent loss, let's go ahead and give them extra assets just so they walk away, being whole again. But the network can do that because it recognizes that it doesn't actually have to pay out very much money at all, because if you stay in the pool long enough, you're going to make money in the end anyway. So it's, in some ways, it's really almost like a mental hack, because it's like, it gives people the confidence that, okay, if I stay in long enough, I know I won't, walk away at some massive loss or something of this nature. I'll just stay in and I'll get my money back and all that stuff. But the reality is, if they did it, even if Thorchain didn't give the permanent loss, they would still get it back. Do you know what I mean? It's kind of this funny little, almost like a mental hack in a sense.
I see. Let's talk a little bit about like, where is Thorchain today? You guys just like launched mainnet or something like that very recently. Can you talk to me a little bit about what have the steps been? Like you had this chaos net or a test net that was live with real value, and then you kind of like, maybe what was there before, what is there now?
Yeah, so about 9 months ago, the team launched what we call single chain chaos net. And that was a complete implementation of the Thorchain concept, connecting to just one single chain, which was Binance chain. And why did we choose Binance chain? Well, we said to ourselves that, Binance didn't really have any kind of DeFi at that time to take advantage. So there's a huge market there. And connected to the Binance chain is very easy because they have instant finality. There's no like double spend attacks. There's no reorgs or all this kind of complexity that you see with Ethereum and Bitcoin. So this was a much easier kind of first chain to connect with. And so that was about 9 months ago. And that was there in part to show that the technology actually works. We had all this audits, economic audits, tech audits, code audits, all these things. We had hundreds of thousands of dollars spent on audits and all these things. But the audits are great, but they only go so far. They only know what's on paper. We want to confirm that the economic model works, that the network is secure, that you can actually trade asset A to asset B using this Thorchain network. And we'd proven that. And that network has been extremely secure. It hasn't had any significant attacks or any of this stuff. And it actually has proven that on average, that the fees are much less than what you would see on something like a Uniswap, but the ROI is actually higher than what you might see on like a Uniswap. And that's very like a counterintuitive idea. And I get that's kind of confusing in some sense, but because the slip-based model kind of has higher fees for larger trades and lower fees for smaller trades, sometimes every once in a while, some whale comes through, just makes a massive trade, which creates a huge amount of fees and goes all to liquidity providers. Actually gives more ROI for those individuals. So that first chain was there like just to prove the idea and the concept. Is it secure? Do threshold signatures actually properly secure the network? Does the slip-based fee model work? All these kind of questions to prove in the real assets, real economy, does it actually work? And so after that was done, we said, all right, now we proved that the single chain works. Let's ramp it up. Let's go Bitcoin, Litecoin, Ethereum, Bitcoin Cash, Binance. Let's launch a chain with all these chains that can be interconnected and show that it works as well.
And that's where you're at today. This multi-chain thing just launched recently.
Yep, this just launched on April 13th, just a day or two ago. It's been going really well so far. A few bugs here and there, but nothing too significant so far, which we're very pleased to see.
And so does this other single chain, this chain that you talked about before, does that still exist in the wild as a separate chain and entity than Thorchain? And are they bridged together at some point? And then also, are you going to need to make, you said 5 assets here on this multi-chain. Is the idea that you're going to be launching yet another chain, or like talk to me about how they kind of coexist together?
Yeah, so single chain exists today. It continues to kind of crank on. At some point in the future, like 3 months, 6 months, however the team feels, it'll be kind of shut down over time by the node validators kind of agreeing to shut it down. And the rewards will be ramped down on this chain and then ramped up on the new chain that was just launched a couple of days ago. So over the long term, eventually this chain will go away. And anybody who wants to pull up their funds, so you're welcome to go ahead and do so. You can do it at any time. Even if you don't pull out your funds, when the chain actually shuts down, the chain will do what's called a Ragnarok protocol, and the whole thing will just explode out, and like all the funds will be just like sent back to everybody who put money into system, just like autonomously do that. That'll happen in months and months down the road. There's no plan to create another chain tomorrow or anywhere in the future. This chain that was created a couple of days ago is going to be the chain. Eventually, that will kind of graduate to the mainnet label at some point. The reason for that is because why we made that separate chain is because there was a shift from using a BEP2 based Binance Rune asset to have Rune be its own asset. And to do that on a live chain with all the parts like gears like going would be just a very dangerous and difficult change. And we just didn't want to throw that risk. It was just too risky of an idea. So we, as a team, as a community, we decided to create a separate chain and then over time ramp this thing down and ramp this thing up.
Cool. Well, we're starting to get to the time here, but I would love to hear if you had any thoughts about the goals for the future, anything that we didn't cover that you might want to talk about. Talk to me a little bit about the future plans for the project and anything else that we might not have covered.
Yeah. So the network will be following up with synthetic assets in the near future. Where you can have synthetic Bitcoin, synthetic Ethereum, synthetic whatever. That's going to be really great because it's going to offer like Lightning Network like functionality where you have a very fast chain, like you can send transactions very cheaply, but it's also going to empower the Cosmos ecosystem and using something called IBC to send those assets to other DeFi projects in the Cosmos system. So for example, like Injective is a derivatives exchange that's being built in the Cosmos ecosystem. And so they might actually say, oh, we want to support Bitcoin and Ethereum, but we don't have to do all the hard work of like actually touching Bitcoin directly themselves. So they can just like use the synthetic Bitcoin from this network. That's something we're really excited to see happening. Where you have planned for composite assets, which is basically taking many synthetic assets and putting them into an index. So if you want to like invest into crypto, but you don't want to have to like decide which ones to buy or whatever, you can just invest as in crypto as a whole. You can say, I want to invest in the top 10 assets. I want to invest into like maybe DeFi. I want to invest into like fiat, cryptocurrencies, whatever your style may be. That's something we're really excited about. And the last thing we're really excited about, we're looking to implement is lending and borrowing and doing cross-chain swaps, which I was mentioning earlier. That's going to be ginormous. That's going to be huge. That's really going to reshape DeFi in many respects.
And do you have thoughts on a timeline? Are there any expectations? Like you mentioned it as the third and last most important thing. Is that because it's further out in the vision, or is that coming up soon? I know that it's really tough to do technical timelines, but yeah.
So the first thing is synthetics. That's actually already done. It's actually already in the chain today. The only reason why it's not like enabled right now is because of some downstream UIs and other aspects to the ecosystem. So that will be just enabled at some point in the future. That's actually quite easy to do. The next thing after that, I think we're going to focus most on as a team is lending and borrowing. That's probably the biggest, most demand thing. Because if you look at the biggest DeFi project right now, it's going to be what? It's going to be, Maker. It's going to be Aave, Compound. Like those are the biggest in terms of TVL out there. That's where the most demand is. So I think that's what we're going to be focusing most on. Our implementation is written up in a GitLab issue on our code base. Anybody can read it. Anybody can comment. Anybody can, point out any flaws that it might have in its design. Please, we're more than welcome to do so. Timeline will be the actual implementation of that lending and borrowing is actually quite easy. It'll probably only take like a few weeks to actually build, but the testing and the downstream UI aspect will take some more time. So I figure maybe 4 to 6 months.
Great. That's awesome. No, that's super exciting. I've been interested in the project for quite a while. I have, I hear lots of people talking about it. Thank you so much for helping educate the Real Vision audience about what it is that you guys are doing. I'm excited about the project. It sounds like a lot of other people are. So thank you so much for helping educate our community.
Thanks, Sebastian. Thanks for having me here.
Yeah, thank you.